And we are live.
Awesome.
All right, cool. Let me go ahead and just put that on.
Take a screenshot.
Yeah.
Put this up here.
So we're going live on YouTube right now. So if you guys want, you could hop onto YouTube and ask us live questions while we're doing the weekly outlook for you guys. So we have Stephanos here as well.
What's going on, guys?
All right, see you guys on YouTube, and then also we'll go ahead and post this on our YouTube channels as well.
Yes.
All right, awesome. And I'll go ahead and tag you in it too.
You get anybody on YouTube yet?
Not yet. We have one viewer.
Cool. What's up, viewer? Don't mind us. We're just getting ourselves ready.
All right, so let's go ahead and start recording.
Recording in progress.
Cool. So what's up, guys? We're gonna do the weekly outlook here, and if you're on YouTube, feel free to go ahead and put any of your questions into the chat, and we'll go ahead and answer that for you as well. So we're gonna go through the fundamental analysis as always. We're gonna do the technical analysis as well. We're gonna hand that off over to Stephanos, and then let's go ahead and get started. We're also gonna have the economic calendar. So these are some of the important articles from the upcoming week, things that we should be watching out for. So things that came out over the weekend, things that have come out yesterday, even today, and things that we should be watching out for the rest of the week. All right, what's up, everybody? So
Everyone's doing well.
Yep. So some of the key things that I want to go over first, we're going to come over to Germany in just a little bit. But the very first thing that I want to go over is some of the macro fundamentals when it comes to world economy. So we know that things have started to slow down, right? Everything from the supply chain bottleneck going on. We've also seen like hyperinflation concerns going on as well in the US, and there's some concern about inflation in the UK, and we're seeing consumer sentiment kind of dropping down across the board for a lot of the major economies as well because of the concerns around Delta variant, concerns around is the economy going to remain open or are we going to shut down, is there going to be a slow growth, so all those kind of things. And also of course Evergrande concerns as well. So are they going to default on their loans and on their payments, and what impact would that have to the rest of the economy? So now we're starting to see stagflation. So stagflation is where you have high inflation, you have high unemployment, and you have slow growth happening. So you're pretty much just, in that little consolidation area, you're just kind of plateaued at that point. So that's what we're sitting at right now. And you're seeing commodity prices surging, deals stagflationary blow to world economy. So this is for commodities in general, but you're going to see the same exact thing happening. So lately, if you've been trading the dollar, if you've been trading gold, you're probably wondering what's pretty much going on. So that was a question that I've been receiving a lot in the last couple of days from people, like what's going on with that, because you're seeing the dollar kind of gaining strength and then also weakening at the same time, depending on what pair you're trading, and then also gold kind of consolidating or faking out at certain levels, especially if you're scalping. That you must have seen this a lot. I'm pretty sure you saw this while you were scalping too, Stephanos, where you're just like, what is going on with gold? Like with technical analysis, things are starting to line up, but fundamentals is just like, what's going on? So that's
been like that for quite a bit.
Yeah, and that's because there's a lot of uncertainty from a fundamental perspective, right? So all these things that we have been discussing over the past couple of weeks or so, now we're starting to see all of that kind of play, but we're also seeing so much uncertainty where you were personally, I think I was watching your story, where you were personally talking about how there's no agreement within the Fed about inflation, about tapering, right? So that's where if those institutions who are going to be making these decisions for us, if they can't agree on it, if there's a lot of back and forth happening, then think about what does that really do for the consumer. You're going to be confused as well because you don't know which way we're headed. And so that's what we're seeing right now. And that's where you're seeing a boost of inflation. From that, you're starting to see prices increasing. You're starting to see inflation increasing a bit more.
I think they know exactly where we're heading, but I think with maybe lack of leadership, I don't know, but maybe it's just they can't get on the same page, it feels like some people are hawkish, some are dovish, and they don't know which direction they want to go. If you want to call it hawkish, Powell's recent statements have been the most hawkish yet, but he's saying that inflation is not that big of a deal, but he does want to start tapering.
Right.
Like, how does that make sense? Right? It's just, I think they think that majority of the public just doesn't think, or maybe they don't know economics, and maybe they're right. Most people don't know this stuff. Most people don't pay attention to this stuff. But, the ones inside, the ones actually doing it to make a living for themselves, like you guys, like us, we know what's going on, and we can see right through it.
Absolutely. And a lot of it comes from the data, too. So they're saying we're kind of slightly above 2%. We're way above 2%. That's what we're saying.
Right. We're over double.
Right. And so we're sitting at pretty high inflation right now, and we're just kind of seeing that increasing gradually as well as the days go by, and these decisions, they're not being made. So here's the article's title if you guys want to go ahead and take a look at it, and it breaks it down for you as well, pretty much step by step. And then also, like I talked about, consumer confidence falling across major economies. So consumer confidence also falling in the UK as well. And you're seeing the same exact thing coming out of all central banks. The Fed we're talking about, they're uncertain about tapering. Bank of England's Governor Bailey, he was talking about tapering as well. And then on the other hand, you have Japan, who was dealing with the state of emergency, who was dealing with the high COVID cases and all of that. And they're talking about, we know we're not going to see growth for the next couple of years. We're going to stay in the accommodative stance. So that's where we are right now from a global perspective. And exactly what you were saying, I think that's a good leeway to come into this article here, where we had Powell speaking today in front of the Senate, right? The testimony, and Warren opposes dangerous Powell for second term as Fed chair. So one thing to kind of note here, and the way that, we have been seeing all these fundamentals kind of unraveling over the course of past couple of weeks, is that the very first thing, there's a very, very high chance, I would go as far as saying 80 to 90% chance, they're not replacing Powell, especially not right now. When you replace... You think
this is political theater?
Political theater, but also when you replace a federal chair, they're going to bring in, the other person's going to bring in their own policies, right? They're going to bring in their own views. And now you want to think about it as, a government, as central banks, and those institutions who are making the decisions. Do you really think right now is the best time for a change like that, especially in a central bank? It's not. You're going through inflation concerns. You don't know if another major economy, China, is going to be, or China's Evergrande is going to be defaulting on their payments, where obviously the US has invested a ton of money there as well, right? There's so much concerns, and there was so much uncertainty happening from a global perspective, that there's almost an 80 to 90% chance they're not going to be changing them. And that's exactly what we're seeing from Biden as well. So when you, again, this is the title of this article, so if you guys want to take a look at that, but if you scroll down, his term is going to be expiring in February, and then Biden is saying that they need to either push further of Powell's, right here, they need to increase their push for Powell, or they need to pick a candidate more palatable to liberal Democrats. The chances are Powell is staying around, right? Because you're sitting in pretty much,
Never know.
You're sitting in a recession. That's kind of what we're going through at the moment. We're setting up for probably even a worse one at the moment. They're not going to be changing the Fed chair. Usually you see a Fed chair changing when there's extremely worse conditions already happening because of an existing Fed chair, which isn't what we're not seeing right now. But we are hitting the debt ceiling and things like that, but we're not in that major depression or major Great Recession type of scenario. But usually it happens when you're sitting in that economic growth, or you're sitting at the top of the economy cycle.
The Fed needs to stay as independent as the Supreme Court. Like they need to be their own entity. They make their calls. We're in debt to them. Like, well, you know.
So this is another like a hot topic for a lot of people. Is the Fed really independent? Right? The central banks, they are supposed to be independent, but like we talked about it last time, through indirect methods, they are always influenced by the administration. Even if the central bank isn't making the decisions that the government wants them to, the administration wants them to, they have to clean up some of the mess that the administration makes through their policies. And so in that way, they are indirectly influenced by some of the policies that the administrations make. And then we have the debt ceiling mess. Could debt dollars absolutely secure status? So same thing here, whether you increase the debt ceiling or not. I mean, I think the dollar is going to be losing its value regardless of that. So if you do increase the debt ceiling, then obviously, you're making the dollar even weaker. You're going into even more debt. Obviously, people are going to be taking up more loans when the interest rates are so low. If you don't do that, then you have to obviously pay back some of the debt that you've been making. But how do you make back that money is the biggest question, because you have been injecting money into the economy over the course of the last almost 2 years now, right? We're in September, almost going into October. For almost the last 2 years, you've just been injecting money into the stock market. We've seen that. We've seen stimulus checks being given out. We've seen so much like unemployment benefits being given out. How do you make that money back? So regardless of whether you increase the debt ceiling or not, I think the status of the greenback is still going to be hurt.
The issue is like in an economy like right now, the bubble like right now, what they want to do is tax people to pay that, right? Where it really should be coming from trade, from good trade with other countries, to balance our budget out, balance everything out. It shouldn't be coming from the American people. I mean, yeah, we should be paying taxes, but I don't think we're going to be making up for that with taxes alone. It should be we should have a good, healthy economy. From the trade that we have, the manufacturing that we had.
Right. So the question here is, one, how do you tax people when there's a huge gap between jobs opening up versus people actually getting hired for those jobs? It doesn't match. There's a lot of people who are still on unemployment benefits. There's still a lot of people who are still home. They're not working, right? So how do you tax someone who's not working? Where do they get the income from to pay you? Second thing is, even with the trades and all of that, the major ports, trading ports being closed in China. There's some ports that are being closed across major economies, right? There's the whole Brexit situation, post-Brexit consequences still going on, where there's so much like back and forth between the UK and the EU, with Northern Ireland involved and those trades happening. So we have tensions around trades as well. So yeah, we have trades happening. Yeah, we have manufacturing happening. None of that has stopped, right? But then again, you already have so much uncertainty around it from a fundamental perspective, from a macro fundamental perspective, that so much of it is just uncertainty. And now the question is like, how do you make that money back? The first way that they're trying to come after is taxes. It's part of their infrastructure bill. It's part of a lot of the policies that they're trying to pass, right? But now, like, even like the most basic thing is like, if you get like $600 or more from PayPal, you have to like show that in your returns, right? So there's like ground level, like you're seeing so many examples of this, and it's just like, where do you get the money from? Because a lot of people, they're not making the, especially like the communities that they have been trying to target, which is low income people, right? Those demographics, they're not making enough money to come back and pay you enough, so then you could pay back and not have to increase your debt ceiling.
And for some reason, what they don't realize is that inflation hurts those communities the most.
Absolutely.
Like, inflation's not going to hurt people that make money. It's not going to hurt the celebrities. It's not going to hurt the 1% like they always want to go after. It's going to hurt the communities that can't afford the bread, the milk, because it's too much. They can't afford to go anywhere, to go to work, because the gas is so much.
Yep.
So you can't be printing money and mortgaging our kids' future, and it's just a mess that we keep getting ourselves into. But I understand that the Fed's in a rough spot right now, because the moment they taper, and I think our economy is so weak that the moment they start tapering, they won't even get to increasing interest rates before the market crashes.
Absolutely.
That's where we're at right now.
Yep. And one key sentence I want to highlight here was this one right here. The Treasury Department is set to run out of cash on October 18th. First of all, they're never running out of actual cash, completely. If anything, they're just going to start printing more, which is what they always do. But they're set to run out of cash on October 18th unless the Congress suspends or increases the debt limit. It's exactly what, Andy was saying in that, last video. Like, are we going to see another government shutdown happening? For a day or two or, however long, if they're not able to make that decision. That's probably what we're hinting at the moment.
Mm-hmm.
And then next up, we had, the reason why I wanted to bring this up is because we had Germany's elections this weekend. So you have Biden says Germany's projected election winner is solid party. So he's talking about the elections here. Obviously, anything that he says isn't going to really, make an impact on their elections. But it's good to know kind of what are the different opinions that we're seeing right now, looking at the current state of Germany and their state of economy at the moment. So this is another article that you can go ahead and take a look at. So the reason why I'm not complete breaking them down and giving you guys summaries is because we're giving you the article title so you can go back and take a look at it. But also we want to go ahead and move into the economic calendar where we see a lot more important data is coming out this week. Johnson says fuel crisis easing, urges Britons to buy normally. So same thing there. We've seen inflation there. We've seen some crisis happening. We've seen concerns around energy companies that were considered to be failed companies, and the UK government said that they weren't going to bail them out, besides the large ones, of course. And then we saw the rippling effect of that, where a lot of, like the meat and things like that, those shelves were going to be empty in the stores because of energy prices increasing and major suppliers also failing to deliver on the products and the demand. So now we're seeing that Boris Johnson is saying that the UK's fuel crisis is stabilizing, and he's pushing against the industry demands to issue more visas to foreign truckers to fix the disruptions in the country's supply chains.
Did the elections in Germany already finalize? Like, he definitely won?
Oh, yeah.
The reason I'm asking is because the whoever just got elected in, part of that party, mm-hmm. is already going after Britain, talking about they went with we pushed very hard to keep Britain in our mm-hmm. In our European Union, and they chose to leave, so now they're going to face consequences. Like, he mm-hmm. barely even got elected yet, and he's already starting to threaten them. So yeah. We'll see how that situation unfolds.
Yeah, so if you want those live updates, then you would just come here and take a look at that. So this one was updated as of the 27th, so as of yesterday. And so if you want so what you would just do is, anyone looking at this right now, you would just click on the folder and then just click on the source, and it brings you directly here.
Awesome.
And then you have all the other information that you need.
I think they got the letters wrong. Wouldn't it be SDP, not SPD? Social Democratic Party, SDP.
Yeah.
Right?
Yeah.
They did it on the chart too.
Yeah.
Not important.
But yeah, so there you go. So you have some of those fundamentals as well, but is it really, they're going to say it's stabilizing. Of course, they're not going to cause that fear into the people, but the key thing is you want to be looking at the data. So one data that you could just simply Google if you want to look this up is energy prices in the UK. And then you will, or fuel prices in the UK, and you will see whether or not is it really stabilizing, right? So you want to pay more attention to the data instead of what they're saying, but what they're saying is pretty much causing the sentiment for a lot of the investors and the consumers. So that's another thing that you want to watch out for.
Just checking where the market's at right now. Now that was leaning heavy on the markets. Yeah, they're all down right now.
Yeah, and it's because, so one way, if you're trying to understand fundamentals, is we look at these articles because we're looking pretty much through what they're saying, right? We're trying to understand what's the outlook really like? Are they really just trying to, calm you down kind of a thing? Or is there really truth behind what they're saying? At the moment, there's really not, because there's so much uncertainty that's happening. So that's what you want to be able to look at. You want to be looking at the data, because the data is what's really going to tell you the truth, right? Those numbers aren't really going to lie, except if they're coming out of certain countries who cushion their data. But that's just, different. So we're not going to say anything about that. But so you have a lot of data points that you can go ahead and just take a look at. And then also you want to be paying attention to what they're saying, because a lot of it is going to tell you what's the outlook like, right? If they're really going to start tapering, the Fed is really going to start tapering, is the data really aligning with the decisions that they're making? If not, then yes, there's going to be a correction that's going to happen, right? And it's inevitable. It is going to happen. So those are the things that you want to be watching out for. You want to read these articles to understand what's the sentiment going to be like, because that's a big part of the market, right? There's 3 types of analysis: technical analysis, fundamental, and market sentiment analysis. So that market sentiment analysis is what you're really trying to understand. And then you also have the entire fundamental analysis, where you put everything together and you understand, okay, what's really going on here. And then starting, so let's get into the economic calendar. So we started off pretty heavy from a fundamental perspective this week, where you had the German federal elections happening. You also had the BOJ governor speaking as well, Bank of Japan governor speaking. And then you had the ECB president speaking. You had FOMC members speaking. You had Governor Bailey speaking. So a pretty heavy Monday yesterday. And then Tuesday, today, you had the Fed Chair Powell speaking. You had consumer confidence coming out of the U.S. And then you had a lot of 2 of the FOMC members speaking as well. But you also had some low impact data coming out. So these are some of the things that you want to be watching out for: the goods trade balance, the prelim wholesale inventories, because these are pretty much leading indicators, right? Manufacturing is the most important part of the economy. So there's the consumer, of course, who's the core, but then the manufacturing also really determines the growth of the economy. If you're not manufacturing things, if you're all into services and things like that, then you're probably not going to be experiencing that big of a sustainable growth happening in your economy.
You'll have a trade imbalance.
Right. And then going into Wednesday, tomorrow. So tomorrow in New York session, you have the ECB president speaking, you have the Bank of England governor speaking, you have Japan's governor speaking, Bank of Japan's governor, and then you have Fed Chair Powell speaking. Very, very important session tomorrow, so don't be surprised, going into the mid New York session, if the market starts to show you some volatility, if it starts to show you some fake outs, if it starts to show you some consolidation. This is very, very important. This is going to be moving the markets. You have all the major economies, governors coming out, or Fed chairs coming out, a major economy central bank officials coming out and speaking. So you want to be really paying attention to this.
Market's going to rock a little bit tomorrow.
Yeah, so be very careful when you're looking for your trade opportunities. And then going down into the pre-London session, you have some GBP data coming out, current account, final GDP. You have the revised business investment, and then you also have some Euro news coming out as well. So going into Thursday's London session, be sure to wait a couple of minutes when the session opens up and let the market kind of price in all this data that's coming out, and then look for your trade opportunities. And then Thursday, as always, you have unemployment claims. You have the Chicago PMI coming out, FOMC members speaking. So another thing to pay attention to, kind of understand what's the sentiment like. Right now, we just talked about how there's a lot of uncertainty within the Fed officials. So another thing to kind of pay attention to understand where is the economy pretty much headed. And then you have some JPY data coming out in Asian session on Thursday, and then Friday we're ending off kind of easy, where you have core price index coming out, and then you have the PMI data coming out. So a ton of USD data in New York session on Friday, but not so much of heavy fundamentals or speeches.
Yeah, PCE is going to be nice coming out. Also consumer sentiment, University of Michigan. ISM manufacturing. Yeah, Friday should be a solid day.
Yep, solid day. All right, let's go on into the technical side. Do you guys have any questions for fundamental analysis right now?
1 minute.
Alright, so go ahead, Stephanos, whenever you're ready.
Yep. Just going to share my screen.
Give me 1 second. Alright, go for it.
There we go. Let's do it. There we go. All right. What's going on, guys? Hope everyone's having a great day, great weekend. Let's take a look over here. Actually, I'm on the monthly right now for GJ. We're going to start with GJ and move over to gold. But right now with the quarter ending, let's go to the 3-month over here. And as you guys can see, obviously we have that bearish candle coming right back down. Current quarter over here reacting to 156. So as you guys know, very significant level. Held support over here during COVID. We've broken this down many times. You could draw that support right down here from the 2008 market crash. Let me just adjust this. But as you guys can see over here, we've had this multi-year downtrend of price just respecting this area and tapping a third time. So you got, 3 times on a trend line confirms that it's a valid trend line. So our main confluence is support and resistance. 156 is a level that you really got to pay attention to and keep your eye on because we could be coming up to retest that soon. But we have things that need to happen before that happens as well. Moving over to the monthly over here. Again, price back in May tapped into 156, and we've been bearish ever since, coming right back down to this previous rejection area. If you look to the left, you got these candle body highs over here that price is now rejecting right now. But could we push through that area and continue down with a clean move to the left? We could. We just got to, trade what we see and not what we think. So just adjust this real quick and move down to the weekly right now.
I would even mark off that level on the monthly time frame, because as you drop down to lower time frames, you are going to see some volatility over there.
Okay. Yeah, no, I normally start doing it around, I try not to mark off levels on the monthly, just because it gets so messy once you go down to the lower time frames. You know what I'm talking about?
Yeah, for sure.
Yeah, so you got these candle body highs over here. Wick rejections, multiple. Even if you look to the left as well, you got these wicks as well. But looking over here at the weekly, right now price is reacting to that level. Very significant level over here, 149. So we finally tapped into that area, and we ended up closing bullish right here last week. Right, we shot right back up, and now we're rejecting this previous level. Now, if we zoom in a little bit, you've had this multi-week downtrend over here of price just respecting this previous bearish trend over here, creating these lows. We come right back up to retest that area. You can see it better on the daily, and I'll break it down on the daily. But right now, if you take a look at the weekly, we're in the beginning of the week, and the week already created its top wick over here, and now it's flipping bearish. So what's the chances of us coming right back down and retesting 149 flat and continuing down to fill that wick? They could be pretty high, especially with some clean moves to the left once you break a couple levels. But we need to break those first. We need to close below those levels for that to happen. We could very well end up rejecting this level down here and then continuing right back up to 156, but we need to break levels up here first.
Yeah.
Right? And things need to happen, right? Many different things need to happen. Now, I think one of the reasons we had this spike up here is because the Bank of England was talking about increasing interest rates even before the year ends and before they start tapering as well. So obviously that's going to send the value of the pound up. And I think that's what that move was last week. And it continued into the beginning of this week until we got kind of like a fake out. And I'll show you exactly what I mean on the lower time frames.
Yeah.
But it was very identical to what it previously did over here. So looking at the daily right now.
Real quickly, back on the weekly time frame.
Yep.
I think there's an interesting move that I was taking a look at as well, and it was that first of all, you have that entire wick rejection right here, right? And then I would create like a zone or something, right? So that's what I had at the moment, like right around here. So if we're able to break below that, because now if you also look at this entire area right into this is where we have price pretty much consolidating, right? This is where we had some you saw like some volatility, wick rejections, things like that. You also had like a price gap up right here. for FX CM is what you're using, right?
Yep.
And then same thing here where you have, some volatility where prices are failing to break the highs up top here, and they're rejecting the lows down here as well. So they're pretty much just sitting in that little range. They're kind of just consolidating. So those clear sells, I agree with you, that entire wick rejection would be below that zone. So this is what I'm targeting as like my point of reference, that wick rejection right there. And then for buy opportunities, exactly what you said, we would need to break above these areas and then continue back up bullish.
Now, also, before we go down to the lower time frames too, those are all great points. Now, let's say we continue to consolidate all week. I don't think that's going to happen just because of all the fundamentals coming out and all the economic data. Bailey speaking a lot this week. Obviously, Powell speaking. That's gonna shake up the markets, especially the yen. But over here, let's say this weekly candle closes the way it does. Now, what I've seen on the lower time frames on GJ when it comes to scalping, when price leaves a candle like this with a tall upper wick and this candle flips bearish, but it leaves a weak bearish candle, like the candle body is weak, but it's on a significant level, normally we hold support there and we continue up to fill that wick. I've seen that many times. So let's see if we get something like that. But again, I highly doubt it just because of all the economic data coming out and some of these fundamentals coming out. And they're pretty serious, or not serious, I don't know if that's the word, but they're pretty significant. Yeah, there you go. So anyway, looking at the daily right now, I'm just going to make this a little bit thinner.
Sure.
Right over here. It's a great level right over there. But what you guys got to pay attention to, and the way you can catch some of these moves is, can you see my annotation over here?
Now we can, yeah.
Okay, cool. So when price taps into 149, you just got to pay attention to what it does right after that. And you would have been able to grab this move right here that we recently just got last week.
Yep.
Right? Where price pushed right back up. Now, bringing it right back up here, can you see my cursor?
Yeah.
Cool. So bringing it right back up here, we had this consolidation after tapping into 156. Sellers got in, buyers got out of their positions, and we ended up just pushing all the way down to create this new low down here. What did we do after that? We formed that support, reacted to this area right over here, and we pushed right back up to retest this consolidation. What did we do after that? We created a new low, right? We pushed right back up to retest that consolidation, and then we create this new low, but not necessarily a new low, but a new low as of late. But we also respect this previous support over here. So every time we tap into this area, we just push up, right? History repeats itself, and that's what you just want to pay attention to. And every single time we've pushed up, we've respected this bearish trend.
Yeah.
We've created that resistance. Now, coming over here, what do we react to? Not necessarily the trend, because that's our secondary confluence. At least it is for me. But my main confluence is support resistance. And this supply area right over here, you have a nice rejection over here. Price rejected one more time. But look at this wick compared to this bullish candle compared to this one right here. It's very similar, and you'll see it on the lower time frames. This is more of a deeper consolidation and a longer consolidation. But with this candle pushing all the way up, grabbing liquidity and flipping bearish, same exact thing happened right over here. So right now we're at that previous level that Sharma was pointing out, around 151. But we got a strong bearish candle closing over here. We got clean moves to the left once we do break that level. Clean moves. So could we get another retest of 149? We very well could.
Another key thing to note is we're looking at that on the weekly and daily time frame. So as you drop down to 4 hour, 1 hour, 2 hour, whatever time frame confluence that you use, it's very key to note that since those levels were on the daily and weekly, you need to see a proper break and retest on higher time frames like the 4 hour, or even minimum should be the 1 hour. Your 30-minute break and retest is not going to help you catch those trades on the daily or on the weekly time frame if those levels are over exhausted. And what I mean by that is if you see like that insane sell-off that we have happening right now on the 4-hour time frame, if that continues, your 30-minute break and retest isn't going to help you take that entire trade to the downside. There's no way that price it would just simply dump down all of this all the way down there, right? Just bearish, unless there was like some extreme fundamental that came out and that helped with that move down. But from a purely technical perspective, that's not a move that's going to happen. You have to see this kind of like support, break, and retest being formed. You have to see price reacting off of previous, significant levels, things like that, or even consolidation.
Well, we could come up and retest this area over here, and it looks like we kind of already did with this wick. But this is a significant setup that I look for all the time. And the fact that it's happening right now in the 4-hour is awesome. We got this massive bearish move with a wick right over here. Got the weak bullish rejection or retest kind of a candle with a weak body. If this candle creates its top wick and then passes to the low of that candle, this is just from a technical standpoint. I know we're kind of overextended with this move right over here, but this normally just drops, right? I'm sure you've seen this before.
Yeah.
But once we pass the low of that candle, especially the fact that we have a wick right down here, this is already creating its top wick and starting to flip bearish.
Yep.
If it passed the low of that candle, you got a clean move to the left, clean move to the left. We could be filling this area right here.
Yep. So, look, you have a move right here to the left that kind of mimics it, this entire thing, right? But you have to take out those buyers. There's always buyers in the market. So same exact thing here, where this is what you need to wait for. You can't just, this type of move usually happens because of fundamentals. So if you were to go back and take a look at, okay, what happened on these dates, you would find some important fundamentals.
Yeah, absolutely. And if you want to just break down that process for people, as far as going back, you just look at the economic calendar.
Yeah, so I just look at, hover over like any of these candles here right after like that break and retest to the left, and then just go back to the economic calendar and see like what kind of data came out.
Okay. Yeah, that's a great point.
Yeah.
Because normally when I backtest, I go back to the economic calendar, but I always look like on Google to see if there's like articles that I can find.
Yeah, so you could find that too. So if you're like looking at the economic calendar, there's like no PMI data that came out. There's like no interest rates that came out, no speech came out. Then the next stop is obviously go onto Google and be like, what articles came out on this date.
Yeah, 100%. I'm chomping at the bit right now. I wish this was like 7 o'clock Asian. Because we have some, I don't want to say solid volume because Asian is always choppy or, not so reliable. But once we pass this low, this could be a good area to take price into. But let's break down the lower time frames first before we start jumping the gun over here. So looking at the 1 hour, it's a perfect setup, right? Perfect break and retest. Broke and retested this area right over here, and now we're passing the low of that candle. This candle has no bottom wick on the 1 hour right over here, so you just got to be aware of that, but at the same time we could just end up dropping. But again, if we clear this support over here, you got a clean move right down into this area right here that Sharma was just pointing out, which you have about 58, 60 pips right over here that you could grab price right back into. But again, also, if you end up faking out over here, now I don't want to say faking out, but just closing right back into this range, you get a clean move to the left as well that you could take price up into. And it's all about what you see, not what you think. Like, obviously, we're very bearish right now on, the way the previous, day or two has been where we just pushed down. This all happened this morning during London. So all day long, we've been extremely bearish over here. So we got to see how tomorrow opens up, which is Asian, right? Asian's the first session of the day. So let's see what happens and how we close and what ends up happening tonight. But again, you got clean moves on either side. I'd rather take the sells, but our secondary bias is those buys up here where we create some kind of a support here and take price up.
Yep.
So let's move over to gold. Right over here, again, back at the quarterly. Over here, we end up creating these historical highs up here from COVID, Iran conflict, Trump being in office, China tensions, many different things brought us all the way up here. But mainly it was COVID, right? All that was going on, I would say, right around here until price, March 13th happened. I would say March 13th was the catalyst of COVID. That's when we officially announced it was a national emergency, and we pushed all the way back up to 2074. Right? So then vaccines started to come in. People started to realize the science, understand what's really going on. Not everyone was so fearful of what was going on. Everyone had no idea what was going on at that point. So once everything started to calm down, we entered summer. Businesses started to open up a little bit. What was it?
Yeah, optimism started coming in.
Yeah, exactly. That's the best way to put it. Optimism started coming in. Businesses were opening up again.
They were actually talking about vaccines during that time too.
Yeah, vaccines coming out as well. Vaccines came out. This is October 1st, so the fourth quarter of the year, right over here. So they came out in November, correct?
Mm-hmm.
Yeah, so vaccines started coming out, and that's where you had, this correction all the way back down to 1680. And then we had the inflation fears, geopolitical issues going on, which brought us right back up to retest that area. Now, if you look at the monthly, it's pretty similar to what we had over here during 2008, right? So now we're kind of entering this phase over here, possibly, unless the market just completely erupts and, we continue right back up. But we shall see when it comes to that. But looking over here, we have a resistance right up here on the higher time frames. We have 1680, which I'll mark off as a support. Wow, way off, huh? Every time. Anyway, so we're basically in this consolidation, right? Once we reach historical highs, we enter this corrective phase, but at the same time, we're really in this consolidation. We're trying to figure out what's going to happen. Same exact thing happened over here, where we enter the economic cycle of, okay, we have stimulus coming in, trying to figure out what's going on, and then all of a sudden the market starts to recover and gold just starts to take that tank, right? So now we're in that limbo right now where we're kind of bouncing off 1680 and 2000 up here, and we're just kind of in this consolidation, but I think we could be breaking support and continuing right back down. But a couple of things need to be happening. But this is our main rejection point that we need to pay attention to, and how price rejected that area multiple times, and now we're pushing low to now fill this wick and retest 1680 again, which we very well could be doing. Looking at the weekly over here, we're breaking below a very key level, right? We found this resistance over here, breaking below 1760. You'll take a look to the left.
Yep.
It's been a solid rejection area. Now, this candle ends up closing below support. We end up rejecting this area, coming all the way back into this range. This is a huge range right here.
That's a massive consolidation within itself, and you pretty much grabbed liquidity from that consolidation.
Exactly. Especially with this candle right over here, you end up coming right back up into the range, and we close bearish right back outside of it. So that's nice confirms. Then you get this wick right up here to retest that area, and then a pass to that candle. You get some clean moves to the left. What are our chances of coming right back down into this area over here? They're pretty high.
Pretty high, right? But there's a minor level that you want to watch out for, which is that 1720 level to the left.
Yep. You're talking about the lower time frames?
Right here, even on
Actually, you can see it on these time frames too. Yeah, so you get this level right over here that price needs to break through. But what are the chances? This is even better. What are the chances of price retesting this level? Pretty high, right?
Yep.
You have all these wick rejections. It's very unlikely that price doesn't want to come back and retest that area.
Yep.
So it's something that you want to pay attention to. And possibly, if price, you're in a sell right now and you take price right back down to this level, what's the chance that you could leave a runner in with stops at break even to come right back down into here?
So there's that possibility, but also you want to make sure that, again, just looking at the overall, like, the trend, the structure, and all of that, we've had huge sells from that resistance, right? Not a single bullish candle at all. Exactly, we're coming right back into this area. We're already starting to make bottom wick rejections into this overall zone. So you could have runners going down, but you also want to make sure that you're understanding, like, what the limitations of your trades would be. So by this point, you could see possibly some sort of a retracement, maybe coming back up, kind of rejecting this area. Either that's like a top wick rejection or a bullish candle close, anything like that. And then a continuation down, and this is where pretty much you would start looking for your scale ins or anything like that. But as you approach this level, you want to be very, very careful, because this is the same exact candle that rejected all these sellers, closed bearish, and the following candle just took the volume to the upside.
Secure.
Yep.
Secure your position. So, looking over here at the daily right now, the daily, now we can start drawing some trend lines over here where we retested 1830, significant level, and now we're printing these lower highs and lower lows, right?
Yep.
Perfect retest of this area. Had a previous little support over here. Price comes right back up to retest it. Nice rejection, doji candle right over here. This candle creates a top wick, then past the low over here, continuing right back down into this area that Sharma was just pointing out, which we need to be careful of. This has been a very significant consolidation over here. I believe we had something similar right over here there as well. Like this whole thing was, right? Same thing here, but more specifically, this consolidation right here to the left. You do have the clean candles to the left, but I do see price coming down into this area. But again, we could end up, closing right over here on the daily and then rejecting, coming right back up to retest, or even something like this. And I think you just pointed something similar out where price comes up here, then we come right back up to retest that trend, and then we continue right back down.
Yep.
So don't just, don't get, I don't want to say impatient, but I guess that would be the word, where you feel like you're missing this move and you think price is going to come right back down. That's how you get stopped out. So just be smart. You should have already been in this move if you were going to take sales right now. But in the meantime, just wait for some kind of a retest in your exact setup. Something like this that we just got, right? Is this not an ideal setup?
That's perfect. I would have taken that entry as soon as that daily low was broken.
Amen. Is that not a perfect setup right there?
There you go.
All right. This is a perfect fake out setup. Right. So there's going to be plenty of opportunities. If you miss this trade right here, there's going to be plenty of opportunities for you to take a trade, and we could very well get this exact setup right here.
Yep.
Right back down into 1720. And if we break 1720, I think, we're going to be heading right for 1688.
Yep, clean sells in that entire wick fill, even on the daily and the weekly time frame.
100%. Looking at the 4 hour now, it gets a little messy over here. So what I'm going to do is just get rid of this. What I like to do is just even that out. Now we do have this level as a very significant level. But again, what you want to pay attention to is most recent support and resistance. What did we get right here? Is a perfect retest of this area. Is this candle going to close bearish to continue right back down? Or are we going to start to consolidate in here? We got to see what it looks like in the lower time frames. Consolidate in here, where you get some kind of consolidation. We come right back up into this area, maybe into this area, and then we continue right back down.
Yep. Exactly.
Right, so just be careful. You want levels to break. You want candles to close, especially during Asian session right now. Looking at the 1 hour, look at that. See, I don't really want to be trading in this. Look at these top wicks over here.
Yep.
There's a lot of rejections. I'd rather just wait for price to break the low over here. And guess what? You're going to be getting... Where was it? What was that setup we were looking at?
On the daily, I believe.
Was it today? I don't think it was. Was I thinking of GJ?
Possibly.
Instead of on G? Wow. Long day, guys. Anyway, we're stuck in this consolidation. Wait for price to break that support over here and take price down. Because you do have possibly, I want to say it's clean, but you do have an area to take price back down into, and all these rejections down in this area over here. But I would want to wait for that break and close below. Don't just try to, if we start passing these candles over here, don't just try to take a sell. Wait for candles to close below that area, get a top break right here, and then take price right back down to 1720.
All right, awesome. So we have a question about fundamentals and understanding market sentiment. Do I determine market sentiment by economic data or overall remarks by the Fed in their speeches? So the market sentiment, when the speech is being made and the data is coming out, any economic data, the sentiment is usually shaped by the speech and the data on lower time frames, on the 30-minute, 15-minute, things like that, maybe even on the hourly. But when you start going on to higher time frames like the 4-hour, the daily, weekly, monthly, the market sentiment is usually shaped by a combination of the data, it's not just specific one event that's happening. So the speech, whatever the Fed is saying, so if Powell is saying like, we're getting ready for tapering, but inflation, it's still under control, you want to be looking at the consumer sentiment, you want to be paying more attention to the inflation data that's coming out. Price index is coming out this week, so you want to be paying attention to that, right? Those kind of things, what's happening on the retail side, and pair that with what is he saying. If it doesn't align, you're going to see uncertainty. If it aligns, then you will see, price moving bullish or bearish depending on whichever way that the data aligns, really.
That's a great answer.
All right, any other questions before we go ahead and head off here? I hope you guys were able to enjoy this live breakdown, and we hopefully want to do some more of these.
Of course.
Paul is here. What's up, Paul?
Paul, what's up, brother? Yeah, guys, again, for our series as well, let us know any kind of suggestions as far as what you guys want to know. Don't be shy.
Yeah.
The best people in any industry are the ones asking questions. The ones that end up becoming CEOs or massive entrepreneur and business owners, those are the ones that were asking the questions that nobody wanted to ask in the beginning.
Yep.
So don't be shy. Don't think like this is a stupid subject and maybe other people have gone over it already. Like, we're happy to do it. It's entertaining for us. I love doing that series. So just let us know. And then also just let us know any subjects you want us to cover more specifically when we do these breakdowns.
Yeah.
And then if you want to help us out, let us know. Give us some ideas of how we could do the Instagram as well as we're doing this, because I think it's a massive opportunity to be streaming on all these different social medias so we can get across to everybody that we can.
Yeah, absolutely. All right, awesome. So if there's no other questions, then we're pretty much done here. Trade safe this week, guys. If you guys have any questions, feel free to reach out to either of us. If we don't get to you right away, then we're coming. There's probably other people who are messaging, but we are going to respond to you. That's for sure. And then as always, feel free to send your charts, ask for help on your analysis. Paul said beautiful analysis on point. Thank you, Paul.
Appreciate it, brother.
All right, awesome. Trade safe, everybody, and then we'll go ahead and talk soon.
Trade what you see, not what you think.